Of course, one of the hot topics on Capitol Hill these days is what to do about the banking system and primarily the toxic assets that sit on their balance sheets. That was the original intent of TARP, was to buy up those assets, but we've since gone well beyond all of that. But at least one member of the Senate wants to do something about that, revisit that issue, and that is Republican Senator Kit Bond of Missouri, who joins us today from the Hill to talk about his plan to try and get rid of these toxic assets. Senator Bond, always good to see you, sir. Welcome back.
Pleasure. It's good to be back with you and talk about a very important subject.
You call it the American Credit Cleanup Plan. You talked about this on the floor yesterday. Essentially, as I'm reading the details, this is a model something like the resolution trust model of the 80s and 90s, right?
That's correct. I think everybody realizes we got to get the toxic assets out of the system. Even the president said it in the State of the Union. But the original TARP, as you indicated, may have saved us, along with the Federal Reserve, from a major systemic crash. But they have not done anything but react on an ad hoc basis to every single problem that comes along. We need a plan. We need to get rid of ad hocracy and start on a plan that will clean up the credit mess.
And what would that plan be?
Essentially using the FDIC's powers, expanding them if need be to cover more institutions. But the FDIC was set up to deal with failed institutions with toxic assets.
You know, the one component that has been a thorn for those people who feel that this wouldn't work gets one little phrase in your description here. You say that for these insolvent banks, toxic assets would be removed. Now, plenty of people on Wall Street say much easier said than done, because you got to set a price, a value on these assets, and the banks that are holding them must be willing to sell them at that price. How would it work under your plan?
Number one, most of the assets on the books of these banks, which are toxic, have been written down. So we're not paying book value, original book value. We're not paying 100 cents on the dollar. We're paying what they've been written down on if we're taking them out. If we are simply removing them from a sick institution and setting up a good bank and a bad bank, then the FDIC, or if they delegate it to another regulatory authority, which could happen, can determine what kind of capital injection is necessary.
Okay.
If they're taking toxic assets out, we would put them in government hands temporarily until the market recovers.
But how does that set a price? How is a price set through that? I mean, or is it even relevant, because you're saying that there would be a stress test, the banks would be insolvent anyways,
yeah, if there's
right?
A stress test.
The extraction actually isn't painful anymore because the bank's already dead.
Well, that is, if they are clearly a failed institution, then you set up a healthy institution to sell that off, and you may have some kind of capital injection to make it healthy, and take either an equity or a debt stake in that institution.
I guess the problem is when the bank passes the stress test by the skin of its teeth, and it's not truly bankrupt, but it is wobbly. What do you do? When you say we remove these assets, the bad assets of the banks, are you saying that government buys them? Or are you saying government basically nationalizes the sickest banks and just takes them?
If the bank could be healthy, if it exchanged some of the toxic assets for cash at the basis which they've been written down, and they have been written down, or the auditors can write them down to something. Yeah, well, let me finish my point. And the point is, the regulators have great authority when they go in to say this is a performing asset, so it may be worth 60, 70, or even 80 cents on the dollar. This one has nothing behind it. Most of them are mortgages, and you take those out at the price. At the written down price.
So why not, as several bankers said to me, guarantee all of that bad asset stuff and let the private sector trade it back and forth? It'll trade at a higher level because of a federal government guarantee, and then the feds only have to pay off when something truly defaults, which could be less than 100% of the bad assets. Why not just issue a blanket guarantee to get this stuff trading?
Well, number one, that's a banker's acceptance under some circumstances. That has been used in the past. Number one. But number two, the most important thing is when you've got failed institutions, as part of the failed institution resolution, we should not be saying the failed executives should be limited in their pay or should give up their jets. They ought to be canned. We need to get rid of them.
Okay, that's
not pay, and then set up a good institution. And with the guarantee, you still have the valuation
Senator,
problem.
If I could ask you about the tax issues that are now on Capitol Hill. Housing is the root of a lot of the problems that are plaguing these banks. You mentioned it yourself, mortgages. One of the most controversial components of the president's budget is a reduction in the ability to deduct interest from your home mortgage. Are you in favor of that particular component of the budget?
There are a lot of things. There are many things that I dislike in that budget, but taxing home mortgage interest, increasing the taxes on it when the mortgage is a part of the problem is a bad idea. So is taxing small business. So is crippling the ability of charities to raise charitable contributions by limiting those. In the middle of an economic downturn, a recession, or whatever we have, raising taxes is disastrous. It's what was done in the Great Depression, and that helped keep the Great Depression as a depression until World War II came along.
Do you get the sense that that particular component, and let's couple it with the charity issue that you brought up, do you get the sense that the home mortgage tax and the charity tax will make it through or not? Are those DOA?
Well, there's a heavy Democratic majority. I'm hoping many of my Democratic colleagues will see it as I do and realize that we shouldn't be putting taxes, for example, on small business, the engine that generates most of the new jobs in this country. If you put a new heavy tax on small business, as has been proposed, you're going to kill the job creator. We need jobs, but first of all, we need to get the toxic assets out of the market. Those are the things that are blocking credit and keeping small businesses, as well as families and even governments, from getting the loans they need to get this economy moving again.
Senator Bond, while we have you here, sir, the president's convening this health care summit. Of course, that is very high on his legislative agenda, as you well know. And I'm curious your thoughts on how the Republican Party plans to respond to an issue that has come up again and again over the decades, and we don't seem to get any movement on health care reform. And if you could answer pretty quickly here, I know we've got to move along, and I know you've got a meeting to get to as well, sir.
Basically, what we ought to do is use the tax system to make sure that everybody can afford a health care plan for themselves and their families, paying for it by eliminating the deduction for employer-paid health care, so people with employer-paid health care would be held even. We also need association health plans. Right. We need community health centers and many other things that I've developed. That's the direction we ought to go, not nationalizing health care.
Senator Bond, we are grateful for the time, sir. Thank you for your thoughts today.
My pleasure.
Kit Bond, a Republican of Missouri, joining us from Capitol Hill today.